And I'm joined now by John Chachas. He's the founder and managing partner of Methuselah. I always stumble over that name. Methuselah Capital Partners, and also the former co-head of the media practice at Lazard. And John, I know tax is a huge thing for you as well. You ran in the Nevada senatorial race on parts of the issues. Part of the issues were on taxes. We just heard from John Riding say, it doesn't seem like we're focused enough on sort of getting clarity on taxes, which is hurting small businesses.
Well, clearly the absence of any job growth is directly connected to the sentiment by owners of businesses that their tax rates are going up, they're going to have smaller incomes. Why are they going to hire somebody? And I think one of the tensions in this is we keep talking about raising taxes on the $250,000 earners in America.
Right.
Well, those are the people that own car dealerships and hair salons and travel agencies, and if they think that their income is going to fall, are they likely to hire anybody? So we're going to see a jobs report this Friday that I think will unfortunately continue to show very anemic job growth, all related to taxes.
Well, then what do you think is going to get companies to start hiring then? I mean, on the tax issue, what do you think is going to get them to start
hiring? Companies take risk when they actually see some semblance of stability and some outlook for growth. And I hate to say it, but my 10-year-old called this epic failure, and it really is. My 10-year-old is.
Okay.
We've got 535 people who are charged with actually running the business of the government, who are now going on vacation and kicking this issue to a committee of 12 of them. Like somehow in the next 60 or 90 days, those 12 are going to come back and solve this question, which has just sort of profound implications to the financial statements of the country.
So what I'm hearing then, John, is that from some of the people that you're talking to, the clients, the CEOs that you talk to, there isn't any more confidence restored, even though we seem well on our way to passing this debt package.
I don't think so. I think that this, it's sort of like saying we didn't pull the trigger, but we still have the gun pointed at our temple. It doesn't really accomplish much to simply say we're going to kick the can down the road further. Of this $1.5 trillion number, about $15 billion of it actually occurs in the 2012 fiscal year. $15 billion. So we're running an operating loss as a country of $120 billion a month. We're borrowing $120 billion a month to finance stuff that we can't pay for. And what this great debate accomplished at this tripwire of raising the debt ceiling was $15 billion over the next 12 months. And $1.5 trillion over 10 years. It's just tiny, tiny numbers in the scheme of the problem. And I think businesses say, well, we didn't drive over the cliff, but have we really altered the landscape much in terms of our outlook for economic growth? And I think most businesses, the answer is no. So we see them accumulating cash,
right.
Huge cash balances.
We're talking $80 billion at Apple and tens of billions at the banks.
Enormous cash, but no growth. No one putting capital to work.
Okay.
That's what the government's really doing, and that just breeds uncertainty. So if you're a company, you react. It's the one difference between the companies that are traded on this exchange and government. Government doesn't react. We're running this huge deficit. Washington goes on holiday, decides they'll kick it to a committee.
Right.
These guys, they're running businesses. They respond to their shareholders. They respond to their boards, and so we've seen thinning down in staffs all across the banking sector.
Do you think it's going to be as bad potentially as we saw back in 08 and 07, or no?
Well, I mean, there was an awful lot of tightening of the belt already that occurred,
right.
And then we sort of loosened back up a little bit. I know in my own firm we're hiring selectively, but very, very carefully, and I think that we'll continue to see banks trim until they see some discernible change in trajectory. M&A volumes are, it's choppy. Financing markets are choppy. That doesn't look to me like an environment where people add a lot of staff.
Well, I was going to say, I mean, you may not be able to put a direct correlation, but when you're seeing a lot of these banks fire, how does that affect in other parts of the business? Well, you were just talking about M&A. I mean, some are saying now, are we going to go through a soft patch here in the M&A front as well?
I don't think the banks really drive that as much as people might think. The banks are reactive to that, but it's endemic. It basically says there's low business volume generally, low growth, and uncertainty.
John, you just mentioned you're hiring selectively. I mean, how are you finding the hiring process right now? Is it difficult for you to find talent? I mean, what is it like?
No, I mean, I think that if you really wanted to grow right now, there's an awful lot of particularly young talent. If you look at the unemployment rates nationally here as well as in Europe of people under the age of 25, it's unbelievable. You can find some incredibly talented people who've been coming out of MBA programs who can't find a place to go to work.
But the pay? Is the pay coming down?
You can be pretty aggressive about what you offer these people. Yeah, people are looking to go to work, so they're a lot more willing to negotiate.
Yeah, I mean, well, that's been corroborated in the income and spending numbers that we got just a few moments ago. John, really appreciate it. Thank you for staying with us down here at the New York Stock Exchange.